The United Arab Emirates, which was a founding member of OPEC since 1967, just told the world that they're leaving the oil cartel effective May 1st.
The United Arab Emirates says that it is withdrawing from OPEC and OPEC+. OPEC is a decades-old cartel of the world's largest oil-producing exporters. The energy minister says that it will make it easier for the UAE to meet.
So many people just think nothing ever happens just because they don't pay attention to the third world. Yes, but it's also so many people don't believe, like people sometimes like a hurricane is coming. The weather forecasts a hurricane is coming, but you go to the local people where it's about to hit and they're like, I don't see anything. There's nothing wrong with weather here. Some people that just won't believe it until they see it with their own eyes. Some people like hear about Strait of Hormuz closing and oil going up, whatever. It's only when gas prices hit $6 a gallon that they'll understand the significance of the closure of Strait of Hormuz.
Changing demand, but it is a major blow to OPEC at a time when the Iran.
And I've run into it so much, like back when the 2008 financial crisis, and you're seeing literally the engines of the financial centers going up in smoke behind the scenes, and the world just continuing on like everything is normal. The financial system isn't on fire. That eventually it takes time, but that fire, the effects of that fire do get felt by the average person. And everyone remembers how bad it was economically back in 2008, 2009.
War has triggered a global energy crisis.
So the markets are now reacting to the supply shock, and gas at the gas pump is now at a record high, and the paper price for a barrel of oil just went up over $100.
And you see, we've gotten into a situation where a lot of commentators are now talking about the paper oil, because at first few weeks of the crisis, you didn't hear about that because the actual price of oil and the paper price of oil were still roughly the same. It's only about a month in that complete disconnect, where if you need the physical oil, the real stuff, you'll be paying through your nose, or you could go into the paper markets, the financial world, and buy this weirdly cheap oil on the futures market.
But the most interesting part about this story is that for the first time in over 50 years, the U.S. is actually being threatened by one of its closest allies. How's it being threatened? It's because just a few days before the UAE announced it was leaving OPEC, they put out a warning. The warning said they may be forced to use yuan or other currencies if they run low on dollars amid the Iran war. Basically, they're saying, hey, you guys started this war, and if we run short on dollars, we're going to start pricing our oil in yuan and potentially start selling off your assets. Now, in response, the U.S. was like, please don't do that.
Yes, yes, the United States did say that, but it was more like there was no please. It was, don't do that. These Gulf states, whether they know it or not, they're puppet states. And they're not allowed to sell their U.S. assets because they would crash the United States financial system. If all the Gulf nations sold their financial assets at the same time in a fire sale, tank the treasury market, tank the stock market, it'd be a disaster, which is why it's can never be allowed to happen. And we have bases in these places. We have leverage over them. We have propped them up, their undemocratic regime, for decades. We own them. They're not allowed to sell the assets in the United States. In fact, when they be able to sell oil again, they'll be expected to put more dollars into our economy, dollars that they'll never see again.
And Scott Bessent, who's the Treasury Secretary, said that giving them the dollar swap lines would, quote, prevent the disorderly sale of U.S. assets.
And the reason this isn't portrayed like that in the media is how dependent, how beholden to the United States these countries really was made clear. It would be clear that they're puppet states, and that has all implications for democracy. Like, we're propping up these undemocratic regimes because they've agreed to just hand over a significant part of their oil wealth directly to America, never to be seen again. If that arrangement was known throughout the world, it'd be like, God, America is really screwing over the people of the Persian Gulf, propping up corrupt leaders that they get rich and they turn over most of the country's wealth to America, and the rest of the people get practically nothing. Right now, though, for example, if you're a citizen of Saudi Arabia, the Saudi royal family can at least pretend that, we're safeguarding Saudi Arabia's wealth. We have it all stored safely in U.S. assets, and we aren't squandering our oil wealth. They can say that, although under the fiction that they're allowed to sell and withdraw their money from the United States, which they aren't.
Mr. Secretary, can you talk about this request and whether or not you expect to support it?
Many of our Gulf allies have requested swap lines.
You see, just the fact that the Gulf allies are requesting swap lines, why would they even request that? Why wouldn't they just sell their U.S. assets? I mean, why do they have to grovel to the United States and say, give us swap lines? That just shows you. They know they can't sell their U.S. assets.
You would have just read about the UAE, and swap lines, whether it's from the Federal Reserve or the Treasury, are to maintain order in the dollar funding markets and to prevent the sale of the U.S. assets in a disorderly way.
Now, hold on. How much U.S. assets do those countries have? And it turns out the GCC collectively holds over $2 trillion in U.S. assets.
See, selling $2 trillion in U.S. assets in a fire sale over 6 months would completely crash our financial system. You think that, let's say, people in Washington, the deep state, is going to leaving that up to chance? No, they're not allowed to sell these assets. It's part of the deal. We prop up their undemocratic, in all cases, brutal regimes in the Middle East. Some of them are more modern and put a veneer of sophistication on them. Some of them all of them have some version of a secret police. But they're all undemocratic. Yeah, not great places. And we prop up all that, and we allow them to take a portion of their oil sales to live luxuriously. I mean, the royal families in the region. And in exchange, they just park this money in the United States, and they need our permission to do anything with it. If you want, maybe we allow them to move some money from treasuries to the U.S. stock market, as long as it stays within the United States or something like that. But yeah, they're not allowed to take this $2 trillion out. If anyone really tries, suddenly there'll be a terrorist regime. If UAE actually tries to sell its money, we'll declare a terrorist regime and freeze all their assets. And they won't be able to sell them. We control them. We own them. These assets are under our control.
That is a lot, which means the U.S. basically just admitted that the Gulf states hold enough American assets that if they were to sell them, that could destabilize U.S. markets. And because the U.S. does not want to destabilize the market, the U.S. is going to give them access to cheap dollars.
This is the perspective of the media that, yes, the UAE actually controls its U.S. assets. But all their U.S. assets are parked in the United States through U.S. banks that are under U.S. control. And those banks, they'll need, just like Iraq. In Iraq, it's open. When the government requests money from the Fed, from its oil sales, we tell them, yes, you can take it. No, we don't like your new prime minister. Get rid of him. Put a different prime minister in. We literally did that recently. And in Iraq, this relationship is far more open. But the rest of them that are supposedly long allies, yeah, so he's saying, yes, if they sold all that, it would crash market, but they're not allowed to sell it.
And make sure they don't sell their U.S. assets. And as a distraction to all of this, we're seeing the president setting his sights on taking over Cuba.
But the president also speaking about the process.
So that threat of Wong, it's because these countries don't control their U.S. assets. But if they sold oil in Wong, they would control those Wong. They would actually be able to take all that money back. Like I said, right now, any money they sell in dollars, Petrodollar, they are forced to keep a huge part of that in the United States, not allowed to take it away. But if they start selling in Wong or crypto or something else, 100% of that money can go back to UAE. So that was what that threat that UAE did was about. It was about, okay, we'll stop doing this deal where we sell oil in dollars, you keep more than half of it, and then we get the rest. Yeah, we're suffering right now, and unless you give us a swap line, as soon as Straits open, we're going to sell it in won and crypto and keep all the money, and you won't get any of it. That was a threat the UAE was making, and that is why we extended these swap lines.
Prospect of the U.S. taking over Cuba, quote, almost immediately. What do we know about?
Because you have to understand, otherwise it doesn't make sense, their threat of selling oil in won and crypto. I think most people read like, why don't they just sell their U.S. assets? Why do they need, how does it make sense for them to start selling in won and, well, it's because when they sell their oil in dollars, the United States automatically takes a cut out of it, a huge cut. And it's that they're forced to keep in the United States. And they're desperate for dollars right now with the absence of their oil revenue. So they want to be able to keep all their oil revenue or at least have a swap line. That's the situation.
About that.
We'll have one of our big, maybe the USS Abraham Lincoln aircraft carrier, the biggest in the world. We'll have that come in, stop about 100 yards offshore, and they'll say, thank you very much, we give up.
So even though this story seems like a story about oil, it's actually a story about power and leverage. And in this video, I want to explain exactly what's happening and what it ultimately means for our portfolios, because this affects gas prices, gold, Bitcoin, the US dollar, and the next phase of the global monetary system, which at least for now looks like is being negotiated right now. So with that said,
there's still huge number of countries that are dollarized, where their currency is the dollar. That people go out to store, buy something, they use US dollars. It's not fast to change that. It's to replace the currency, you have to design a new currency, you have to roll it out. It's not instantaneous. So de-dollarization is going to be a process that takes years. So we're just in the starting phases of that. And the real pressure to de-dollarize won't come until inflation hits the double digits. And double digits and accelerating double digits, like 12%, 15%, 17%. If you have that in a row, countries like, let's use something a little bit more stable than the US dollar that keeps its value a little bit better. And there will be place to de-dollarize. I've said it before. As soon as you have one place, like, for example, Iraq, that uses US dollar, they stop using US dollars and they roll out their own currency. Well, what happens to all the dollars in Iraq that they don't need anymore? Well, they get sent to other places that use the US dollar as their currency, like Syria and Libya and things, and the United States. And then those other places will experience inflation because they suddenly have much more US cash circulating their economy. And what's their solution? To de-dollarize their own currency, and they get rid of their dollars. And you'll have that process repeat across the globe. And each time a country or region abandons dollar, a big surge of physical cash will make its way back to the United States, and accelerating inflation even more. And it's that spiral eventually leads to hyperinflation of the US dollar. It's not going to be instantaneous. This is a 5+ year process, I think. It depends, for example, what happens in Iran. For example, if the entire Gulf goes up in flames, if this war escalates, this whole timetable of terms of the dollar losing its value accelerates drastically. If we're more the tame thing where it's Strait of Hormuz closed for 3-4 more months, and then it opens with all the oil infrastructure still intact, then yes, we're talking more 5 years plus.
let's get into it. Hi, my name is Andre Jick. Hope you're doing well. Come for the finance and stay for the next phase of the petrodollar. To understand why all of this is so important, we got to go back 50 years. And that's because the story of the UAE leaving OPEC is actually the story of a financial system that was supposed to be built in secret, which now, for the first time in half a century.
You're saying, Protostale, that we have the secret war, that Nazi ideals never disappeared. I think it's really much simpler than that, much more simple. You just had this agency, in the U.S. Treasury called the Exchange Stabilization Fund. all the U.S.'s gold was centralized, was sent to this secret Exchange Stabilization Fund, ESF. And then it was given zero oversight. Like Congress will never see anything it does. So it's like the ultimate slush fund to do absolutely anything it wants. And then you have naive, possibly some of them corrupt, people that we're fighting the Soviet Union or fighting communism. And so they start using that gold to fund their operations, to bribe politicians across the world. And the way they did that, they didn't actually move the gold that they had at the Exchange Stabilization Fund. At that time, the US dollar internationally was backed by gold. That means anyone outside the United States could take their dollars to a US embassy, whatever, and say, give me gold. And we had to give them gold. So what the Exchange Stabilization Fund did to start funding all these CIA operations and nonsense across the world is they just printed tons of dollars, all of it backed by the gold in the Exchange Stabilization Fund, and started flooding the world with them to do all these absolute nonsense covert operations. Then the rest of the world realized, oh my God, there's so many dollars out here, and the United States doesn't have that much gold. There's no way they can redeem all this. And so people started turning in their dollars for gold in huge numbers. And that was the start of everything. From that point on, the Exchange Stabilization Fund realized that, you see, it has no oversight from Congress. All the nasty, horrible stuff it's doing, because it's a slush fund. It's the funds, the covert stuff that CIA doesn't want the government to know about, that would really disgust American people. That's what they do. And if the dollar collapses, the Exchange Stabilization Fund is exposed, and it brings everything into view, and everyone involved with that is literally going to jail or maybe, in some cases, executed. So their lives, those people at the Exchange Stabilization Fund and the parts of CIA associated with them are dependent on keeping the dollar from collapsing. And to prevent them from collapsing, they've done horrible misdeed after horrible misdeed, like the Kennedy assassination. And they've just, like Iran-Contra, 9/11. And there's no grand ideology. There are groups associated with it that might have Nazi ideology. There's Zionism, the deep state's relationship with Israel. So it encouraged Zionism. But at the fundamental core, it's just a bunch of people that don't want to go to jail and don't want to be exposed, and they're desperate to keep the dollar going because of that. There's no deeper ideology than that. The outside that core group, like, for example, globalists in Europe, yeah, there might be a new world order or a one world government that they believe in or stuff like that. But the real core, the place where this all stems from, the Exchange Stabilization Fund, people involved there just want to not go to jail. And it's all about doing that. Oh, and the pedophilia, like the Epstein, it's sort of... how do you keep people from ratting out this horrible system of the ESF? Well, you get whoever gets deeply involved in this dark core of the government to do stuff to children, for example. Then they're stuck in it. They can never go back to the good side, so to speak. And so I'm sure there's a lot of that, of anyone who gets indoctrinated and learns the deep secrets of the deep state has to go do some probably very illegal things to be accepted.
Century is sort of starting to come apart. So let's start at the beginning. In 1971, President Nixon closes what's called the gold window. What that means is the US dollar, which used to be backed by gold, is now backed by nothing. It's just paper. Now here's a question. If you're a country sitting on a finite resource, like oil, why would you sell that for a currency that can be printed in infinite supply? Only a fool would sell something real for something that's not, right? And the oil-producing nations of the world were not fools. So in 1974, Secretary of State Henry Kissinger flew to Saudi Arabia and made a deal. And this deal was never publicly announced. There were rumors of what the deal was, but no one knew for sure. Until a Bloomberg FOIA request in 2016 finally revealed the details of what was actually agreed to. And the agreement was Saudi Arabia would price its oil exclusively in US dollars. Those dollars would be recycled back into US Treasury bonds, essentially lending money back to the United States, because that's how the US borrows money. It creates bonds that other nations buy. And in return, the US would give Saudi Arabia military protection and weapons. The arrangement is called...
In this arrangement, he just said, be very clear. That means when Saudi Arabia sells its oil, a portion of that oil sale, and whatever they sell, gets parked in U.S. Treasuries forever. It never gets sold. So it's basically, if you loan money to someone, well, a loan that is never expected to be repaid, you're basically giving them money. So what Saudi Arabia has done, the rest of the Gulf states, is whenever they sell oil, they give a big share of that to the United States, and that 2 trillion figure they showed, that's how much they've given to the United States, how much they've given without ever hope of getting it back. It's a fiction that these Gulf nations actually have the ability to sell those U.S. treasuries and get the value back for their own people. They can't. It's gone forever.
Called the
That's the deal. They're undemocratic. We prop them up. We sell them military equipment. We allow them to stay in power for decades undemocratically. In exchange, we just take a huge part of their oil revenue.
Petrodollar system. And it was a really good deal for the United States because it meant that every country in the world that needed oil, which is every country in the world, right?
By the way, that is what the left always talks about, colonialism. That means exploiting other countries. That's exactly what the United States is doing with the Gulf, Persian Gulf. You prop up a dictator who sends the wealth of your country to a foreign country in large quantities.
Had to first get dollars to buy that oil, which created a permanent, what economists call structural, global demand for the US dollar. Even though the US dollar was not backed by gold anymore, it was now backed by oil. And OPEC, which stands for the Organization of the Petroleum Exporting Countries.
The only use for fake currency placeholders is for easier trading, shipping, buying online, and laws should be made to remove the tax on buying and selling of gold. Yeah, I agree on removing tax on gold because it's currency. But yes, but that convenience factor is huge. Gold is heavy and inconvenient, and paper is light. So even that's why we had gold-backed currencies, and not people didn't trade gold itself. Gold is a great store of value. It's as a currency on large scale, it is bulky, and it's better to have like paper currency backed by gold than actual using gold.
Was what became the enforcement agent for that system. OPEC's job was to manage supply of oil discipline among the oil-producing nations to keep the dollar-denominated pricing system intact. Basically,
also, considering OPEC, the vast majority of members of OPEC are countries that park their wealth in oil, well, then high price of oil means the U.S. gets more money to fund its deficit from sale of oil. It is basically, I don't know the exact ratio, but let's say half of Saudi Arabia's oil just goes directly to fund our U.S. deficit into treasuries and never to see again. Well, if we have OPEC act as a cartel to have oil at a nice price, then since we're getting a huge part of oil sales, that makes sense for us.
OPEC's job was to manipulate the global price of oil. And now it's 2026, and the whole idea of the dollar as the world's reserve currency to pay for oil is being challenged. That's why economists like Lou Groman say OPEC is only needed in a world where the reserve currency has no other anchor. Because in a world where the dollar had a real backing, like back when it was backed by gold or some other hard anchor, you would not need a cartel that artificially manipulates oil to make that system work. Countries would just accept dollars because dollars are something real. But in a world where the dollar is pure fiat and it's infinite, it's only backed by trust, that's when you need something like...
Yes, like a constant stream of money from the Middle East into U.S. treasuries, never expected to be sold again. That helps you prop up a fiat currency. And biggest part of the petrodollar is that angle. It's, yes, they price everything in dollar, but again, if they sold it in won and still gave the United States half of the profits, then that'd be great for the United States too. The problem is when any of these countries talk about selling their oil in something other than dollar, they're not going to be parking any of that money in U.S. treasuries. That's the key part. And that means we're not automatically getting half the income of all these countries.
Like OPEC, to keep those oil prices stable and high enough that selling oil for dollars still feels like a reasonable thing to do. And the moment oil producers decide, hey, your dollars are not worth much, and your competitor over here is giving us a better money backed by something real like gold, and when I trade my finite resource, they're going to give me something finite too. But if not, OPEC's...
And also China isn't insisting at the moment that anyone who sells their oil in won has to keep X amount of those won in China to fund Chinese deficit. China has no problem funding its deficit, so it doesn't need to do that.
Its whole reason for existing is gone, and so is the dollar's anchor. So that's what the UAE is starting to test. Now, believe it or not, this whole arrangement I just described, this petrodollar agreement system between the US and Saudi Arabia, that actually expired in 2024. After 50 years, Saudi Arabia is like, okay, we're done. Let it expire. And in June 10th of 2024, I made a video about it. The media started saying it was all misinformation. Turned out it wasn't. And it actually did expire, and it was a very big deal. And then the Iran war started. And this is where things get a little more complicated. When the Iran war started on February 28th of this year, it created an economic crisis for the countries that the petrodollar system was built around. And this is where the Strait of Hormuz comes in. Again, it handles about 20% of the world's entire oil and gas supply every single day. Ships from Saudi Arabia, the UAE, Kuwait, Qatar, Iraq, they all have to pass through Hormuz to get their oil to the market. And Iran closed it. And when they closed it, the whole economic model of the Gulf states stopped working. Think about what this actually means for Saudi Arabia specifically.
If it got into the point where Saudi Arabia let this deal expire and then now it is trying to take 100% of the oil revenue and spending it back on Saudi Arabia, well, the United States is, as I can understand why they would want to close the Strait of Hormuz, because it could be the United States saying, well, you're not going to, unless you go back to the petrodollar and give us a portion of your oil sales, we'll just start wars in your region and prevent you from exporting oil. That might be one angle behind the scenes.
Before the war, Saudi Arabia needed oil at around $100 a barrel just to cover its basic government spending, like its imports and its social programs. And they were exporting close to 7 million barrels a day to pay for it. Now, there is a math problem here. How high would the price of oil have to be to generate the same revenue to pay for their country? One economist did the math, and they said Saudi Arabia would need oil at $170 a barrel. Oil is not at $170 a barrel, at least not the paper price of it, because it's intentionally being suppressed using the futures market, which means Saudi Arabia is bleeding money. They are externally borrowing, and it's hit over $100 billion in the trailing 4 quarters, which is a level that's never happened before in their entire history. The world's biggest oil exporter is now having to borrow dollars to survive.
And look at this right here. The fact, look at 2017, they were borrowing money. Why does a nation, like you say collectively $2 trillion of U.S. treasuries, it's more expensive to borrow the money their borrowing cost here has got to be more than the money that U.S. treasuries are paying in interest. If you're just thinking this is Saudi Arabia actually controls its foreign reserves, it's holding U.S. treasuries, it makes more sense just to sell treasuries rather than borrow. I mean, let's say you're getting paid 4% on your treasuries and you're borrowing at 7%. Wouldn't it make more sense to not pay 7% interest and just sell your U.S. treasuries and you'll be making more money? But they didn't do that. It's because they are not allowed to sell their treasuries.
And remember that the Gulf countries, their money is still fixed to the US dollar. And so to prevent their currencies from collapsing, that peg means they need a huge buffer of dollar reserves. When those reserves start going down, it becomes a huge threat to their whole monetary system because they're running low on dollars. And because they're not able to export oil, their economy is now shrinking, because oil is a perfect correlation to the growth of an economy, as you can see in this chart. The more your economy grows, the more oil you use. And the less oil you start using, your economy starts to get smaller. So they're watching their economies slowing down right now. And the war that put them in this position was started by their ally, the United States. So what do when your ally starts a war in your backyard, cuts off your income, drains your dollar reserves, and manipulates the paper price of oil?
And you're not allowed to sell any of your U.S. assets. Not mentioning that, but the fact that Saudi Arabia is borrowing money when it has... Okay, let's actually look at it. Saudi Treasury holdings. Top 5 major holder of foreign thing. Saudi, let's see, Saudi. I think this is in billions. Yes, billions of dollars. $160 billion of U.S. treasuries. And it also has more money in other, like local bonds, state bonds, and the stock market. This is just its U.S. treasury holding, $160 billion. Why is a country which has $160 billion in U.S. treasuries borrowing money? Think about that.
What you do is you make a phone call and say, yeah, look, we need more dollars, and we own a lot of your assets, like your treasuries and your stocks. We could get a lot of dollars by selling them to pay for our economy, but I don't think you'd want us to, right? Want to give us some money? Call it a swap line, right? That's what they're doing. So the bottom line about all of this is that China is...
Yes, but by the graph we saw earlier, they were already borrowing money before these swaps lines. And that... Just so you just go on the assumption, operate on the assumption that all these treasury holdings and these U.S. holdings that these Saudi countries have invested in, they're not allowed to be sold. That's why they're borrowing money. They're actually, if you eliminate all their U.S. holdings, they don't have much. That's why they're desperate, need swap lines, and they're scrambling. And they get in trouble the moment their oil gets cut off. They have no savings whatsoever because the savings in the United States don't exist.
Is now winning. And let me explain how. But first, everything I've explained up to this point, this is the kind of story where the framing you get depends completely where you're reading it. And that's where today's sponsor, Ground News, comes in. Ground News is an app that shows you the same story from hundreds of different outlets at the same time, and it tells you which ones are left-leaning, right-leaning, or center, so you can see...
This is an ad.
...search the high crisis. Oil went up. That's what Ground News makes visible. If you want to link down the channel, winning. Prince meets personally at the timeline of what's happened so back to it. Okay, so how is China winning? Let's look at the timeline of what's happened so far. On April 14th, the UAE Crown Prince meets personally with Xi Jinping in China. April 15th, the UAE and China sign 24 separate trade and investment deals to push their trade over $100 billion. On April 19th, the Wall Street Journal publishes the yuan threat. On April 22nd, Scott Bessent agrees to this swap line before the Senate. And on April 28th, the UAE leaves OPEC. So what they do...
By the way, those swap lines, those are set up by the Exchange Stabilization Fund. They're directly anything international, any swap lines, dealings with other central banks and governments, that's always the Exchange Stabilization Fund. So, but no media ever mentions it anyway.
Did was the UAE locked in that China relationship first.
Instead,
which is basically like putting...
Instead, swap lines. UAE. If you look at a news article, Monetary Authority. That's the term that they use to never use the actual name of the Exchange Stabilization Fund. Is all articles always refer to U.S. Monetary Authority instead of using the Exchange Stabilization Fund's name. Except international monetary authorities, U.S. monetary authorities. They never mentioned the Exchange Stabilization Fund.
Being a loaded gun on the table, right? They call Washington and say, hey, look what we just did. What are you willing to offer us? That's how they were able to get concessions from the most powerful financial system in the world. That's why Trump went on CNBC and said, and this is almost word for word, that the UAE is, quote, a good country and a good ally, and that it was shocking because we didn't think they'd get hit, and that they would likely get the swap line they wanted.
Is there some type of swap possible currency swap with the UAE?
And the swap lines. As someone who's studied U.S. interventions, like the Exchange Stabilization Fund especially, and there have been some reports, it was more transparent in its early days, in like the 60s, when its dollar interventions were just started, and the 70s. Its swap lines are basically loans without calling it loans, just to confuse people. You hear swap line, like what the hell is that? The average person doesn't know what a swap line is. Everyone knows what a loan is. If we're just saying the United States is giving UAE a loan, people are like, why are we lending the money? People can get upset about that. It's, why are we the United States helping fund? Why don't you, if you have this extra money to do all this swap line with these other countries, why aren't you spending that on U.S. citizens? That type of anger. So what do, you call it a swap line. You say, oh, I give UAE ability to borrow, let's say, $10 billion, and they give me, the Exchange Stabilization Fund, the ability to borrow $10 billion from them too. Of course, I never use that. They use their line, take the $10 billion loan, and it's a loan to them, and then I never do anything with my side. So swaps lines are just a way for a central bank to bail out another country while pretending not to.
To help if they need it? And do you think there would be backlash because it's such a perceived to be such a wealthy country? Is that under consideration?
It is, but it's been a good country. It's been a good ally of ours. You know, they're very good for this country. So, yeah, if I could help them, I would.
Then the next day, Scott Bessent goes in front of the Senate and endorses the swap line. So you can understand then how, optically speaking, to the rest of the world, that doesn't make the U.S. look good. That's why there's a positive spin to this. And Scott Bessent says the swap lines were needed to, quote, maintain order in the dollar funding markets and to prevent the sale of U.S. assets.
Yes, but if the headline was United States loans $10 billion to UAE, that'd be unpopular. Like Asmongold, for example, would say, why the fuck are we giving $10 billion to UAE? You know, stuff like that.
In a disorderly way.
When we have veterans on the street.
Treasury Secretary is admitting that a Gulf state holds enough American assets that if they were to sell them, it would be really bad for the U.S. And then the same Scott Bessent who just handed the...
But they can't sell them. I've said it before. But that is a behind-the-scenes angle to all this that isn't public, that people don't know. It just... Saudi Arabia isn't allowed to sell its treasuries.
UAE, the dollar lifeline, went on record and called China a, quote, unreliable trading partner. And that is most likely a reference to China not wanting to sell critical rare earths to the U.S., which the U.S. military relies on. Why wouldn't they want U.S. dollars for their rare earths? The best explanation is, of course, from Luke Grumman.
You're trying, hey, China, I need you to speed up the rate at which you're making missiles for me to point at you.
Right.
And by the way, buy our bonds to finance the missiles that you're making so we can point them at you.
The U.S. has essentially been telling China,
yes, that is what the United States really wants. Be great, China, if you could fund your own destruction.
hey, I need you to speed up the rate at which you're making missiles for me to point at you. And by the way, buy our bonds to finance the missiles that you're making so we can point them at you. Right? That sort of shows you what's happening. There is a dependency on China to make stuff, and China knows it. The U.S. military runs on these rare earth minerals and tungsten, which is the stuff that goes into missile interceptors and fighter jets and precision-guided weapons. China controls roughly 60% of global rare earth mining and an even bigger share of processing, which would mean...
They control 90% of the processing. The processing is the key. The mining, 60% isn't a monopoly. If they only control 60% of the rare earths, we'd get enough of it. It might have some shortage, some problems. No, the problem is the refining, the technologies to refine rare earths that are mined from the ground. China has a monopoly on that, and they had to control 90% of the refining, so essentially the production of rare earths. And that's basically a monopoly, and we're fucked because of that.
The reason Trump keeps extending the ceasefire is not just for diplomacy reasons. It might be because the U.S. could be running low on missiles that it needs to fight, and it can't make new ones without Chinese materials.
CNN has learned that the U.S. military has significantly depleted its stockpile of key missiles during the war with Iran.
And it can't replace those stockpiles for another 5 to 6 years at minimum. And even though the U.S. is extremely financially powerful, the bottom line is you cannot fight a war with paper assets. And for 50 years, the United States operated as if printing dollars and then recycling them through the financial markets was a substitute for actually making things.
That war has consumed large amounts of precision munitions that the United States relies
It has.
on. We're shooting bullets and missiles at a rate that exceeds our ability to produce them.
China made things. They bought copper mines. They built ports. They invested in rare earth processing.
Yeah, one thing China has done is it's shrunk its share of treasuries. It back when I was in 2008, 2009, they kept their Chinese yuan pegged to the dollar, artificially low, and that requires buying huge amounts of U.S. treasuries. That's one way to do it. In other words, to maintain that level, China has to go out and buy things, anything, with its yuan, in great quantities, to keep it artificially low for trade. And at the beginning, they just did it the simplest way, going out and buying U.S. treasuries. Since then, they've started to diversify. They've started to buy other things like mines around the world. They started making any and every type of investment they can. And that's how they control 60% of the mining of rare earths is through these types of investments. And yeah, it was smart of them to switch from just buying U.S. treasuries to buying physical assets throughout the world. That's the position the United States used to be in.
They built their own payment system alongside SWIFT. They just waited. That's how they're winning right now. Okay, so if China's winning, what does that mean for the US dollar? And what it means is that...
No, the one problem Chinese SWIFT system, their equivalent has, is their currency is pegged, and the flows in and out of yuan aren't free. Like you and me, average U.S. or investor, whatever, we can't buy yuan. We can't easily put money into yuan. It's for importer and exporters for countries. Yes, they have the ability to move money into yuan, but for individuals, no. So it isn't. So a billionaire can't decide to put $1 billion into China easily. It's restricted because they have their currency pegged. If they let it if they remove those capital restrictions and allowed money to move wherever they wanted, huge amount of money would surge into China and Chinese bond markets. And borrowing costs of China would go way down, but the Chinese yuan would go way up in value. And like everything coming from China would be 2 times more expensive. It would crush exporters in China and importers in the rest of the world that now have everything for China costs twice as much. It'd be devastating. That's why they don't just allow, that's why they have all their capital restrictions on the yuan. The problem is, as long as those capital restrictions on who can open accounts and move money into the yuan exist, it can't be a reserve currency. It's not, because just for you and me, it's not even an option to put our money there.
That this just speeds up the decline of the dollar as the world's reserve currency. In 2001, for example, the US dollar made up about 72% of global foreign exchange reserves. Think of these foreign exchange reserves as the pile of assets that every central bank in the world needs to hold to back their own currency for international trade. 72% means almost 3/4 of the world's financial safety net was held in dollars. Today, that number is in the 50s, which is still the biggest single share of any currency in the world, but it's not really a monopoly. And the question is, okay, well, what's replacing it then? And what's replacing it is gold, which now represents a bigger share of reserves held by central banks on an adjusted basis, even more than treasury bonds. What that means is central banks around the world, which are the institutions that are supposed to be the most conservative and the most risk-averse financial powers on the planet, they're now picking to hold gold over U.S. government debt.
And any country that's actually doing this is smart. But one thing you have to understand about these gold reserves is a lot of them aren't real. For example, I could look up a picture. Maybe I can easily find it. Give me 1 second. U.S. gold reserve. There. So this is when we were ascended. This is where we were like China. We made 2/3 of the world's manufactured goods back here at the end of World War II. We were dominated the world. We had the, like, I forget, like half the world's gold was in the United States. Gold and mine, it was insane. We had a huge amount of gold. We were ascendant. Then you see, this is the period where I talked about where we started, where the ESF started spreading their dollar bills around the world and undermining our dollar. And this is the point right here where the rest of the world realized, oh my God, there are more dollars out here than the United States has gold. And they started redeeming their gold in large number. And US gold starts going down, 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 down. Then you see right here, you can nearly do a line right here, right? And then mysteriously, it goes flat, as though the United States has stopped selling its gold. No. The reality is, this line continues. They started doing something called gold leasing, which is they were selling their gold without admitting they were selling their gold. So all the gold that you see, if you check the books at the Exchange Stabilization Fund or the Federal Reserve, that's gold that's not there anymore. It's paper gold. And the actual gold is completely gone. And after the US gold was completely gone, they encouraged European central banks to start gold leasing too and selling off their gold reserves. And that continued until about 1999, when central banks in Europe said, okay, we're not doing any more gold leasing. And it's at that point that gold prices started exploding upwards. It hadn't been on an upward trend ever since. But the point is here, this gold reserves, whatever, it's actually lower than you think. The gold reserves of Russia and China and Iran, yes, you can believe in those. But in these numbers are the gold reserves of the United States and European countries, and not all of them are there. So, unfortunately, it's we'll find out at some point in the future who actually has gold or not when the dollar goes down, and it'll be there'll be some anger at some European central banks that claim to have gold, but actually they don't. And the United States, we do have so many other things to be angry about, that the fact that we don't have any gold, I don't know if it'll even be registered on the scale.
They're now picking to hold gold over U.S. government debt. They've been buying gold at the fastest pace in 50 years. And they've been doing that because treasuries are losing trust. Why did they lose trust? They lost trust because the world watched what happened to Russia. When the U.S. froze Russia's foreign exchange reserves in 2022, essentially stealing $300 billion in assets that Russia saved up, every central bank on earth had the same thought. They were like, hey, that could be us, right? And if you hold your reserves in dollars and...
Well, the Gulf states, Saudi Arabia, already knew this. It already knew that if it tries to sell its U.S. treasuries, they'll be frozen. But other countries like Japan, the other countries that are our allies that aren't completely our puppet states, they start having these thoughts, yes.
And treasuries, you're holding them at the say-so of the United States.
Yep.
And the U.S. showed that it was willing to use that privilege as a weapon. And that's why central banks have been rotating into gold. That's why China has been building the alternative plumbing system to international trade. Yuan clearing banks now operate in London, Dubai, Singapore, Hong Kong, and Switzerland. And BHP, which is one of the biggest mining companies in the world, just signed a deal shifting commodity sales to yuan-based pricing with a Chinese state buyer. Iran has also been selling oil to China in yuan for years. India has been experimenting with it. Russia, right? The alternative is already built and it's running. And because that trust...
I think Russia, too, has its own ruble payment system, too. It's just China is a lot bigger and more important. But China, I think Russia also has its own system.
Is gone. Investors are saying, okay, even though I don't really trust you, I'll still buy your debt. Right? I'll still buy your treasuries. But in exchange, if I'm going to park my money in your treasuries, I want a higher interest rate. Pay me more money. That's why we're seeing the 10-year U.S. Treasury yield going up right now. And when this 10-year bond goes to 4.4%, Luke Roman noticed some very interesting things.
It's not just that. What affects the interest rate is also the amount of debt the United States is selling. The United States is still running deficits. And if you sell more and more and more debt, eventually you'll have to offer a higher interest rate because supply and demand. And so one factor just driving interest rates up is just supply and demand. And if we're talking about the interest rates on U.S. debt, there is an angle on that the behind the scenes, those interest rates are lower than they should be because of some messing around the Exchange Stabilization Fund is doing in derivative markets. They're selling put options on U.S. Treasuries. And I don't know if I want to go into this. Basically, it's a protection. Okay, I'll explain simply. I know this from a Federal Reserve transcript that was released in 2008, where they discussed openly their plans doing it. It's a wild Federal Reserve transcript. Can have a look. Actually, I'll just show that quickly. There, playlist. Beautiful playlist. Federal Reserve is selling put options on Treasury bonds to drive down yields. Right there. You can have a look at that video if you want to know the details. But basically, it's going out and selling a lot of insurance. That means someone, suddenly they see this Iran oil crisis and they're worried that might cause inflation. It might cause Treasuries value to go down. What should I do? Should I sell? Well, JP Morgan tells them, oh, no. Buy this very cheap put option on Treasuries. That means if their value goes down in next year, this put option will protect you. So you can, and it's really, really cheap right now. And what you don't know is JP Morgan is acting on behalf of the Exchange Stabilization Fund / Federal Reserve in doing this. And so all these pensions, foreign central banks, etc., are willing to accept lower yields on treasuries because they're buying put options to protect themselves in case the treasury's value go down. And it's a way of manipulating the market. And it's something I don't think hear anyone talking about it, but it's definitely it's in the Federal Reserve transcript. They lay out their plans as clear as day. Selling massive amounts of put options on treasuries is their strategy to keep interest rates down. And I guarantee you now, with the size of our deficit, the size of our debt in the United States, the only way we're paying this low interest rates is because of severe manipulation behind the scenes in derivative markets.
Things start to happen. For example, on March 22nd, 10-year yields went up toward 4.4% after Trump threatened to bomb Iranian electrical infrastructure. Investors got scared and said, pay me more money. Then Monday morning, Trump backed off. March 24, yields hit 4.4% again. Trump talked about a peace deal. March 25th, Iran denied the talks, yields moved higher again. March 26th, yields hit 4.4% again. Trump immediately extends the pause on military strikes. Every single time the 10-year touched this 4.4% level, investors were like, pay me more money. And Trump was like, okay, just kidding. Everyone calm down. Right? And what that tells you is the bond market is actually running U.S. foreign policy. And that's because above this 4.4% level, the Treasury market starts to dysfunction. And a dysfunctional Treasury market, where the U.S. government can't borrow at manageable rates, is very bad for the U.S. economy.
Not only that, like I said, putting put options on U.S. Treasuries. If U.S. Treasuries go beyond that rate, if the Treasuries, when yields go up, the value of Treasuries goes down. It's Exchange Stabilization Fund, for example, could have catastrophic losses if interest rates continue to go up because of what it's done in derivatives. So yes, that does impact the policy because I guarantee you, Secretary Bessent, he's the one who runs the Exchange Stabilization Fund. He knows all this, and he's telling Trump, we can't let interest rates go on treasuries go above this, X and Y. And he gets Trump to make whatever statements he needs, and he do whatever policies needed to bring it down.
But guess what? There's still an energy crisis. And it's not just the Gulf countries that want dollars. It's also Asian countries. And when you inject...
One vector that is funding all this debt is, it's actually complicated. I could go into do an entire stream on that, but prime dealers like JP Morgan, Goldman Sachs are there's like 15 of them that are the institutions that buy U.S. Treasuries from directly from the government, and they have a duty to make sure that any Treasury sold by the U.S. government gets bought, even if there's no buyers. Like they don't have any clients that want to buy, then they have to buy it themselves. That's what the role of a U.S. A prime dealer is, because you can't have the United States try to sell Treasuries to fund its deficit, and then there's no buyers. Then all shit breaks loose. And so, but these institutions are doing buying, Goldman Sachs, JP Morgan, they don't have infinite wealth. So how do they fund these? Well, one thing they do is for borrowing from their clients. It's when you hold a margin account, you allow JP Morgan, whatever, to directly borrow your securities to fund, anything the brokerage firm wants to do. And in the case of prime dealers, that's often buying U.S. Treasuries because they have to. And the ability to do all this, to borrow from the Treasury, it has to do. Clearinghouses are very important. It allows the short sell, the borrowing of client funds. Okay, I'll have to go in and I'm a little rusty on explaining it, but one of the points is, one reason I think the 2008 financial crisis got better is Euroclear. U.S. prime dealers started basically their own brokerage house in Europe. And so they didn't have to use the regional brokerage house in France, Germany, whatever. They started all using Euroclear. And that enabled, on a large scale, to basically borrow against anyone having an account in a brokerage firm in Europe. It allowed looting of that to buy treasuries when needed. And ever since Euro CPP opened, I think Europeans, individual investors, have been funding a bigger and bigger share of U.S. Treasury market. But that's behind the scenes things that will one day have confirmed. There is no transparent data I can use to confirm this.
Those countries with more dollars, it stabilizes bond markets in the short run. But if Hormuz stays closed, that liquidity turbocharges commodity inflation. And commodity inflation is the one thing that makes bond markets revolt, because investors don't want to hold bonds that are being inflated away in real terms. So Scott Bessent is essentially buying time by trading short-term treasury market stability for a potentially much bigger problem down the road if the war doesn't end. And Iran, of course, knows all of this. And that
is one aspect that I haven't said, harped on a lot, but Ponzi scheme, people running them, it's always about just surviving till tomorrow. It's long-term plans are usually not made. Like, for example, outsourcing all U.S. manufacturing to China. That undermines U.S. military, and the U.S. military is key long-term to maintaining dollar hegemony on the world. It ensures your eventual collapse of your dollar hegemony. But they did it anyway because short-term outsourcing to China lowers inflation in the United States. And China has to buy a ton of U.S. treasuries because they're undervaluing their currency. So you get less inflation in the United States, and you get China buying tons of U.S. treasuries. And in the 90s, they're like in the early 2000s, U.S. policymakers or people at the ESF, that's great. It's less inflation, people buying our debt, and at the cost of our long-term prosperity.
The war that's being fought. It's an economic war, not a military one. Okay then, so how does this all end, and what happens to the markets? There's two ways this ends, and both of them are bad. Either Iran collapses, which means Iranian oil goes offline for a long time, causing an oil spike that triggers a global recession into bond markets that don't look good and can't afford it. Or the global supply chain collapses before Iran breaks, which means global inflation spike that also triggers a recession into bond markets that don't look good. And the
second option is all you should be looking at. At this point, if Iran was going to collapse, it would have happened already. Especially now that bombs aren't flying anymore. Sorry. The chances of Iran collapsing is zero.
U.S. plan, which is basically extend the ceasefire and blockade Iran into submission, assumes that Iran is going to break first. But Iran has allies like Russia supplying it, China buying its oil.
By the way, it's not like we're blockading Iran from receiving anything. We're just blockading this region right here. Iran can get things from Russia right here through the Caspian Sea, or what's the sea? Yes, Caspian Sea. Or overland from, I think, Turkmenistan from China. They have other ways of getting things. It's just oil supply. Oil is hard to move, and you really need super tankers and the Strait of Hormuz. So we're just, our blockade really affects, to the extent it's successful, the export of oil.
And a very simple strategy. Keep that Hormuz Strait closed. And while it's closed, the food inflation in the U.S. will continue to go higher. And that's just from higher fuel costs. The fertilizer impact, urea, has not reached us yet.
That's for this winter and next year.
The Strait of Hormuz handles roughly a third of the world's fertilizer trade. The same trade that, according to data from Our World in Data, supports the feeding of roughly 3.5 billion additional people beyond what the planet could sustain without synthetic nitrogen fertilizers. Congress was briefed this month that clearing all the mines in Hormuz could take another 6 months. And 6 months of this is going to be very bad for inflation. But as far as how all of this affects investment markets, the best metric I was able to find that sort of explains all this is Luke Romans at FFTT, which runs a version of the Warren Buffett metric to see if the stock market is overvalued or not. And that metric takes...
It's overvalued. I was going to say, spoiler, it's overvalued, but yeah.
It's the total value of the stock market, aka the market cap, divided by the GDP, but adjusted to subtract the federal debt, because in a time of infinite money printing, the Fed has basically backstopped all this debt. And when you run his adjusted version, you get 3 moments in the last 70 years where this indicator went up above 100% of GDP, which was the peak of the dot-com bubble in the year 2000, the everything bubble peak in the year 2021, and right now. And in the only 2 other times in history, the markets went down between 25 to 47% peak to bottom, and they took between 2 to 13 years to recover. Both times were exceptionally good for gold relative to the stock market. And we're kind of at that level again. Hormuz is still effectively closed, food inflation is going up, and with the U.S. running low on missile interceptors, with China signing yuan-denominated commodity deals with Gulf states, while the U.S. is giving dollar swap lines to keep those same states from selling treasuries. The market is basically pricing in perfection. It's pricing in an AI productivity boom and a super fast end to the Iran war. And if any of these assumptions are wrong, that is going to change the market's assumption and its value by a lot. Personally, I'm of the opinion that investors are very complacent and the stock market...
Absolutely. Selling, yes, I think it's good time to consider your stocks and reduce your holdings. Buy gold. Unless it's a gold mining stock, then it should be okay.
It is being overly optimistic. So for me personally, I'm very cautious and I hold more cash than usual.
Stocks are hitting all-time highs when we have a guaranteed recession in the next 6 months. It's just a part of the insanity of the world.
But I'm still invested in the market. If you want to see how I have personally prepared, you'll be able to find that in the premium membership, which is in the link down below. Sometimes I want to make smaller update videos like what's happening at the...
Anything that depends on U.S. consumers for its profits is going to suffer when this summer gas prices hit, because consumers won't be able to buy as much.
Next Fed meeting, which was accurately predicted, or how I'm personally invested, but since not everyone is interested in watching those videos, sometimes it hurts the algorithm to put them out publicly, and future videos just don't perform as well, which is why I wanted to make them a separate part of the channel. The premium memberships will also give you access to my videos earlier.
All right, I'll stop it here. Well, that was a great video. This will be on YouTube. Please like and subscribe. Come watch on Kick or Twitch, and I'll see you next video. Bye.